A couple of days ago, President Donald Trump announced reciprocal tariffs against all trading partners. Now, he called it the Liberation Day. According to him, is liberation from asymmetrical tariffs. He also called it the golden age of parity. Now, the world watches on in disbelief because they are not very sure as to what to make out of it. And his supporters, they say, I was reading Victor Davis Hanson, he says that the US tariffs are not punitive nor preemptive. They are basically mirror images of what the world is doing. So if the world wants to do away with tariffs, they have to remove their own tariffs. The Chinese are angry, the Indians are silent, Europe is very angry. So discuss all this, we have with us today Shri Prasenjit Basu. Prasenjit Basu is an economist by profession and historian by passion. He was the chief economist for India and Southeast Asia at Credit Suisse, First Boston, and chief Asia economist at Daiwa Securities for 5 years each. Other roles have included chief economist at Khazanah National BHD Malaysia and ICICI Securities, director of Asia Services at Wharton Econometrics, CEO of Maybank Kim ENG Research Private Limited, and board member of Tata Capital's International Arm. His book, Asia Reborn, won the Best Book Award non-fiction at the Tata Literature Live, Mumbai Lit Fest 2018. Now, I have read this book, and before getting into the economics part, I must say it's a wonderful book. So welcome to Samvad, Prasenjit.
Thank you. Great to be here. Thank you, Mayank, for having me.
Thank you. So the first thing we need to understand, Prasenjit, is basically the word tariff, because it's not being talked about it, but I have met many people who basically don't understand the word tariff. So can you explain what tariff means?
Okay, in this context, a tariff is a tax on imports. So many countries have imposed tariffs over the decades and centuries. Most countries began with very high tariffs and have reduced them over time. So if you look at Britain, for instance, when Britain started its industrial revolution in 1760, it banned imports of Indian textiles 50 years before that. Banned. It wasn't a tariff, it was a complete ban. Then by 1820, they had moved to a tariff of 80%. So, you're from Varanasi, where part of the textile industry of India was based. Bengal and Eastern UP was the heart of India's textile industry. It was destroyed through tariffs. But on the other hand, Britain benefited. Britain developed its own textile industry behind a big barrier of tariffs. So typically, many countries start with high levels of tariff in order to protect their domestic industry and to build it up. And this is a standard form of trade protectionism. But typically, since the Second World War, most countries have reduced their tariff rates very substantially as part of this, what used to be called GATT and now called WTO. That process has reduced tariffs substantially everywhere in the world.
For a very long time, Prasenjit, Trump, even during his election campaign, he was very vocal about tariffs. And it was sort of a thing that the world is facing us. We need to get back. We cannot let this go on further. So why this focus? I'll ask you to explain as to why this focus on tariffs. How, according to Trump, is this going to benefit the USA and his MAGA policy?
So Trump, throughout his career, I mean, even when he was outside politics, when he was just a private businessman, in the late 1980s, he was an advocate of tariffs, of protecting US industry from competition. Then the competition was primarily from Japan. So even then, when the Reagan administration had a fairly open door free trade policy, Trump used to criticize it even then. And he has been really consistent about this. Now, what he says is that the rest of the world has been taking America for a ride. America has had very large trade deficits for the last 40 years. And in fact, America has had current account deficits. So the trade deficit just refers to exports of goods minus imports of goods. The current account refers to exports of goods and services minus imports of goods and services. So the US has had a current account deficit averaging more than 3% of GDP for the last 40 years. And Trump says this is because other countries are taking advantage of the US. There is more than a grain of truth in what he is saying. The simple fact is that the US has the world's reserve currency. Most of the rest of the world holds the US dollar as a reserve currency. So when India has foreign exchange reserves, the majority of them are held in US dollars. And similarly for most other countries. The foreign exchange reserves are held in US dollars. And being the reserve currency of the world is a privilege in many ways, because other countries hold external debt in dollars. America has all its debt denominated in its own currency. So that is a bigger advantage. The US is less subject to currency volatility, etc. But the other aspect of this is that the country that is the provider of the world's reserve currency typically has trade deficits. And the US has had that consistently for more than 40 years. Trump says this is unfair and needs to change. So even in his first campaign for president, he imposed tariffs, and in that first term, he focused primarily on China. And China in particular is an egregious breaker of the rules of international trade. There is no doubt that America is right in saying, and Trump is right in saying, that China's approach to international trade is completely unfair. And hence, he was moving to impose tariffs. And those tariffs that he imposed on China starting in March 2018 have worked. They have reduced China's share of US imports from 22% in 2018 to 13% now. So they have had the impact that Trump was looking for. But this time around, when he was running for president, he made it clear that he's going to impose tariffs on all trading partners who have trade surpluses with the US. And India is among them. Interestingly, India has a big trade deficit with the world, but India has a trade surplus with the US. And it's not that large. I mean, it's very small compared to China's, but it is, India exports nearly twice as much to the US as we import from the US. And so he has decided to impose tariffs on all those countries that have trade surpluses with the US, bilateral trade surpluses. And he's also imposed a 10% tariff on other countries that have trade deficits with the US. So the likes of the UK, Singapore, Brazil are going to face a 10% import tariff. Others will face higher tariff rates depending on the size of the bilateral trade surpluses each of those countries has with the US.
Worldwide, there have been fears of recession, but President Trump has brushed aside all these apprehensions and said that this move will supercharge the US economy. He's also said that it is a great time to make money, a big, beautiful deal, very nice words. But $5 trillion have been wiped out from S&P 500 in just 2 days following this announcement. Now, I was reading this during researching for the interview. I was reading JP Morgan says that it has increased the chances of global recession from 40% to 60%. Goldman Sachs increased the probability of recession from 20% to 35%. S&P Global has raised probability of a recession to from 25% March to 30 to 35% after the announcement. The US Central Bank Chief Jerome Powell said that such trade policies might result in higher inflation and lower growth. However, Trump has shut Powell down saying that cut interest rates, Jerome, and stop playing politics. Now, Prasenjit, help us understand how the global economy is going to be affected. Now we are shifting our focus from US to the world economy. How is this going to
Yeah.
be impacted after these reciprocatory tariffs, as he calls them? Are we
Hmm.
heading towards a worldwide recession or even worse still, depression?
I strongly disagree with those saying that we are headed for even a global recession.
Mhm.
And I don't think even the US is going to enter a recession. Now, when you cited those probabilities, the Goldman Sachs is a 30% probability of a recession in the US.
Mhm.
JP Morgan is talking about a global recession,
Mhm.
60% probability. I think JP Morgan is going to have a lot of egg on their faces a year from now. Anyway, the simple fact is that, yes, there has been a very significant negative impact on many companies that depended on the outsourcing of manufacturing to China in particular.
Mhm.
So, Apple, for instance, even now, nearly 80% of iPhones are manufactured in China.
Mhm.
A lot of their components, what is called the supply chain, also is based in China. Therefore, the impact on China, the impact on Apple is very significant
Mhm.
from the imposition of a 54% tariff. What Apple will eventually do is shift a lot of its production away from China. Most of that will move to India, in fact, because India is paying much lower tariffs. Some of it will move back to the US, which is the purpose of what Trump is trying to do. He wants reshoring of manufacturing onto the US, and that will happen over time. But initially, it's very difficult for Apple to move a lot of this manufacturing back to the US immediately. They will initially have to move a lot of it to India, and even that move will not happen overnight. It'll take a few months, more than a year or two, before uh, the majority of its manufacturing moves from China to India. For India, it's hugely beneficial that this will happen. Um, but for Apple, the initial impact is very negative. There's no doubt that the initial impact in the first few months, they have no option but to keep supplying some of their products from China into the US and the rest of the world and paying the very high tariffs. There's no other option.
Mhm.
Of course, they will ramp up some of their production in India, but India only produces about 15% of Apple iPhones. That is supposed to be ramped up it was going to be ramped up to about 25% by this time next year. But it'll probably have to be ramped up to nearly 50% instead of 25%. And that kind of rapid ramp up is difficult. So, yes, there is going to be a big negative impact on Apple, big negative impact on Nike, because Nike produces a lot of its shoes still in, um, in China, Vietnam, Indonesia, all of which are paying very high
Mhm.
tariffs for anything produced there and exported into the US market henceforth. So, yes, there is going to be a very negative impact on several of these companies. But will there be an automatic recession in the US? No. The most important reason why I don't think there'll be a recession is firstly, that most countries, you'll notice that India, for instance, is not retaliating. The European Union is, the von Leyen basically talked about a retaliation and so on. But that is just big talk. They could not execute a retaliation because there were many European countries that didn't want to retaliate. So the European Union acts in consensus. It cannot, just because you're the president of the European Commission, you cannot impose tariffs unilaterally. You have to get consensus, and that consensus doesn't exist. So the European Union has not responded in a retaliatory manner. India is not retaliating. Mexico is not. Canada, again, despite the rhetoric, despite it facing an election in 3 weeks, Prime Minister Mark Carney has refrained from actually retaliating. The only country that has retaliated is China, which is unfortunately making a fool of itself by retaliating because China exports 3 times as much to the US as it imports from the US. So, uh, if China imposes a tariff on imports from the US, it'll be like a pinprick for the US. But if the US increases the tariff rate from 54% to even further higher, it'll hurt China very severely. And the real danger now is that China will then try to dump its excess capacity. China has excess capacity in every industry. So they're trying to dump that excess capacity, which means export it to other countries at below the cost of production in China, which is called dumping in international trade. Mm-hmm. It will try to dump in other countries, India, a key one. So what India, Europe, etc., will need to do is put up tariff walls, anti-dumping tariff walls to prevent China from dumping their products into these countries. That is another significant threat that needs to be dealt with. But as far as a recession is concerned, a recession would only occur if there were retaliatory tariffs by everybody, as happened in 1930. In 1930, America imposed what is called the Smoot-Hawley tariff of 80% on all imports. Others responded with retaliatory tariffs of similar magnitudes, and that caused the Great Depression. People who talk about the Great Depression as something that is about to repeat itself are getting several facts wrong. Firstly, they think that this tariff is as bad as Smoot-Hawley. This is only 1/4 the size of Smoot-Hawley tariffs, first of all. Second of all, other countries are not retaliating. The only one that's retaliating is China. So if the others don't retaliate, and instead of retaliating, actually reduce tariffs. You see, what India and Mexico and many others are trying to do is to reason with the Trump administration and say, okay, you've imposed a 26% tariff on us. Let us find out what tariffs we can cut so that you will reduce this 26% rate to a more reasonable rate. That's what India is doing. Mexico is doing that. Many other countries, including Vietnam. Vietnam has been hit with a 46% tariff. It will cripple the Vietnamese economy. They simply cannot afford to pay a 46% tariff because the American market is by far the largest market for Vietnam, as it is for India. You know, the largest export market for us is the US. So, and the same thing applies to Vietnam. So Vietnam is a much more export-oriented economy than India is. So for Vietnam to lose the US market would be catastrophic. They are therefore willing to negotiate a substantial reduction, a mutual reduction in tariffs. And if the US agrees, then tariffs will actually come down, not go up. So there'll be no recession. I think the basic assumption that JP Morgan and others seem to be making is that everybody's going to retaliate against the US. That is completely illogical, and it is not likely to happen. It's very clear. I mean, Vietnam, India, many other countries are much more willing to negotiate. And I think even the EU is willing to negotiate a mutual reduction in tariffs with the US.
You've been talking of China, and we all know the egregious, you yourself use the word, the trade practices the Chinese used. So I was reading, trying to understand the Chinese mind also, Prasenjit. And as usual, I have nowhere to go except Global Times, our favorite Global Times. So, I mean, there is an editorial in the Global Times, which I'll start quoting, that they say that US reciprocal tariffs directly violate the WTO's most favored nations principle. Ironical, I mean, quoting WTO and trade practices, which states that countries cannot discriminate between their trading partners. Now, this action of the US, they say, breaches the spirit of contracts and undermines the fair competitive environment established under the WTO framework. It has questioned the Chinese have questioned the quality of data used for tariff review. They have said that the reciprocal tariffs are just another form of America First economic bullying. They have warned of supply chain disruptions and elevation of global risk. Although all this sounds very high coming from by China, but given the capacity, manufacturing capacity they have, and the economic superpower they are, we need to understand. So is this going to trigger off a, what should I say, a global trade war, affect geopolitics? I mean, I want you to explain as to how this is going to play out between the US and China. Obviously, it's going to affect the rest of the world also.
Okay, now what Global Times is saying about WTO norms being violated is correct. There's no doubt that the WTO norms require that if you impose tariffs on one country, the same treatment must be given to all other countries. That's called most favored nation trading status. If you're a member of WTO and you decide to cut your tariff or you increase your tariff to one country, you have to extend the same benefit or cost to all others. And the US is clearly violating this. It is imposing different tariff rates on different countries. So, and therefore different tariff rates on different products for different countries. So therefore, this is not consistent with WTO norms. There's no doubt about that. But unfortunately, the WTO has stopped functioning pretty much in the last 8 to 10 years in any case. A second point is that what Trump has been saying is also true, that China imposes non-tariff barriers. There are at least 1,500 non-tariff barriers. So, for instance, our medicines produced in India, okay, pharmaceuticals in India are globally competitive. Most of the world buys the generic pharmaceuticals that Indian companies produce and are very happy with the quality and the inexpensiveness of those products. But our pharmaceuticals have almost no penetration in the Chinese market because they have non-tariff barriers. They impose a lot of non-tariff barriers that prevent India from... Now, if you look at, say, cars, our cars are competitive. They sell all over Latin America, Africa, etc. And they are sold by companies like Hyundai and Maruti Suzuki, as well as to some degree by Tatas and Mahindra. Mahindra is the world's biggest tractor manufacturer. But none of them can sell into China. Why is it? Because China has non-tariff barriers. Now, if you think about non-tariff barriers, they're basically local rules, etc., that quietly tell people, without really saying very openly, that if you import from this country, then you will suffer consequences. This is implicit. So, for instance, it was well known that in South Korea, if you bought an American car, if you bought any foreign car, you would immediately be subject to a tax audit. Any owner of a foreign car would immediately be subject to a tax audit. So what happened was that foreign car sales in Korea were less than 10% of total sales because nobody wanted to be audited just for buying a foreign car. So that's a non-tariff barrier. I used to joke that the biggest non-tariff barrier that Japan, China, and Korea has is language. First, you have to learn their language before you can market into those countries. And that is the first non-tariff barrier. Anyway, now, obviously, we cannot say language is a non-tariff barrier in international trade. But the point is that there are a lot of non-tariff barriers that make it difficult to sell into China in particular. And therefore, the US is right to take action against China. And I think that Trump has gone a little overboard this time. Last time, when he was president, he didn't know all the rules. He didn't know what all he could do. And he was only going after China. And even that, it took more than 2 years before the first tariffs began to be imposed by Trump on China. This time around, he's much better prepared. His team is ready. And they have gone hammer and tongs at every country. They need not have done this. But the idea is to benefit manufacturing in the US. There is no doubt that manufacturing has died out in the US, partly because of this process of globalization. As China, in particular, emerged as a manufacturing hub, a lot of manufacturing processes have moved from the US, especially, to China and to other countries, but mainly to China. And before that, they were moving to Southeast Asia. But now, over the last 30 years or so, most of the relocation of manufacturing has occurred to China, even from Southeast Asia. So, and that is because China has provided a lot of incentives. It has initially provided a very cheap currency. And of course, it has non-tariff barriers to import. So it's a kind of a highly protected place where you can produce cheaply for the world. And once you achieve economies of scale, once you produce on a large enough scale, the unit costs of production decline. And when the unit costs of production decline, others can't compete. Essentially, that is what has happened with textiles and garments. See, China has much higher wages now than India, Vietnam, etc. But China still exports and produces and exports much more textiles and garments than Vietnam, India, Bangladesh, because it has huge factories which have enormous economies of scale, so that the unit cost of production is low. Nonetheless, these tariffs will change the rubric substantially and will result in further shifts of manufacturing capacity away from China to other places. And in particular, I think India is going to benefit from the current structure of the US tariffs, because India is paying a much lower tariff than Vietnam, Bangladesh, Sri Lanka, Cambodia. All these are potential competitors to India. All of them are going to pay much higher tariffs, and therefore India is going to see a lot of the exporting capacity move from these other four countries to India.
There are many in India, Prasenjit, who say that these retaliatory tariffs are going to be a big headache for India economically. Very difficult for India to compete. But listening to you, things don't look that bleak. So do you see this as an opportunity for India to grow its trade, or otherwise? I mean, it's going to be a big challenge. How do you see this in totality?
You see, the big first thing is that India is not as export dependent as most other countries. So even if there was, say, a US recession, India would be relatively unaffected, okay? Because India is not that dependent on exports as a driver of its growth. But in this instance, even if there is a US recession, I don't think there will be a US recession, but even if there is one, India is set to benefit, because for most, for things like textiles and garments, India's exports have hardly grown in the last 10 years. In the last 10 years, India's textile and garment exports were almost stagnant, whereas Bangladesh, Vietnam, etc., were growing rapidly. Now, one of the reasons is that in the first Trump administration, in June 2017, very early in the Trump administration, Trump removed India's generalized system of preferences, which is, you see, generalized system of preferences is something that applies to all developing countries. Developing countries have tariff-free access to developed countries for certain products. So India had that, Vietnam, Bangladesh still has it. A generalized system of preferences for textiles and garments basically meant that India could, before June 2017, export textiles and garments to the US without paying any tariff. Vietnam and Bangladesh still have that till today. India has ceased to have it for the last 7 years, 8 years now. But with the new tariff structure, the textiles produced in Vietnam will go from paying zero import tariff in the US to paying 46%. In Bangladesh, they'll go from 0% tariff to 37%. India pays a normal tariff of about 4 or 5%. It will go up to 26%. But 26% is a lot lower than what these other countries are going to be paying.
True.
And the increase in tariff in India is even less than that because we are already paying some tariff and now it's going to go. So the relative differential, India will have a 15 to 20% cost advantage in the US market relative to Vietnam and Bangladesh. And therefore, our textiles will become much more competitive. And the other advantage we have is that we produce our own cotton. So cotton textiles will be, we don't even have to import it from anywhere else. We have our own cotton. We do cotton textile manufacturing in India and then export it to the US at a much lower tariff rate than our competitors are paying. So we'll gain market share very quickly. So our textiles and garments will do extremely well. Electronics. Now, electronics exports have been growing at 50% a year for the last 4 years in India. We are growing from a relatively small base, we're growing very rapidly. And that includes smartphone manufacturing in particular. Apple now produces about 15% of its iPhones in India. And that is known, it is known that they are ramping up production to make it 25% within the next 1 year. So that's going to happen. It'll probably accelerate now because the Chinese iPhones are going to be even more expensive. They're going to become extremely expensive. So there'll be an accelerated move away from China into India. And so I think over the next 12 to 24 months, India's share of US imports, which is now around 2.8%, should easily rise to 4% or more. So India is going to be a big beneficiary of the current structure. And so if our share goes to say 4.5% from 2.8% now, even if the US economy is stagnant or even contracting a bit, India will see increases in our exports to the US. So quite frankly, we should stay quiet and try and negotiate a mutual reduction. If you can mutually reduce tariffs even further, all the better. But even if current rates stay in place, India stands to gain hugely.
So listening to you, it seems that PM Modi's Make in India came at a very appropriate time, Prasenjit. So, but just we are running short of time, completely out of time, just a couple of minutes, and a very relevant thing for me at least. 24 months down the line, this stays in place. We believe, let us assume that these tariffs stay in place for China. Is the global order, because China was catching up very fast with US, is the economic global order going to remain the same or it's going to change? Very, very quickly, please.
Okay, now you see, it is simply a fact that China is now very competitive in a lot of new technologies. So, for instance, in EVs, electric vehicle manufacturing, China is now the most competitive place in the world to produce them. In batteries for EVs, also, China is very competitive. In things like silicon, polysilicon wafers and solar panels, China is extremely competitive. So some of this will move to the rest of the world as a result of the tariffs that are now in place and as a result of anti-dumping duties put in place by the EU and hopefully by other countries. India definitely needs to raise its anti-dumping duties against China as well. So if that happens, then I would say the likely outcome is that China will face a financial crisis much worse than Japan's financial crisis of 20 years ago. And as a result, if there's a recession anywhere, it will not be in the US, but in China. And China needs to have a recession because otherwise China just keeps on increasing its manufacturing capacity without considering the consequences to itself. They just keep producing more and more capacity. They keep producing more output, regardless of the fact that the new output is unprofitable. They don't care since they are mainly state-owned enterprises. Profit is not the main motive, and they just keep producing. So China has overcapacity in every industry. So if you think about, say, steel, in the year 2000, world steel production was 840 million tons, of which China was producing 128 million tons. 128 million was already the largest annual output produced by any country in the history of steel manufacturing in the year 2000. In the year 2020, China's steel production alone was 1,065 million tons. World production in 2000 was 840. In the year 2020, China alone produced 1,065 million tons. The rest of the world had seen almost no increase. Now, so this is the situation, and this is steel. I could tell you a similar story with aluminium, with cement. Now, cement, what is interesting is that cement is difficult to export by sea. So cement production in China peaked in the year 2016. Steel peaked in the year 2020. That 2020, 1,065 million is the highest they've ever produced. What is interesting is that since 2020, if you look at the last 3 or 4 years, world production is flat. China's production is down. The only country that is seeing steel production increase is India. India has gone from 100 million tons in 2020 to 147 million tons in 2024. So India is the second country in the history of steel manufacturing that produces more than 125 million tons in a year, which it has done in the last 2 years. So India has, but if you talk to steel manufacturers in India, they complain about the fact that cheap Chinese steel is being dumped into India even now. So we need to put in place tighter anti-dumping duties to ensure that you have the rules of fair trade. Anti-dumping duties are permissible under WTO. Every country needs to put those in place because China is going to dump. There is no question. So talk about Hindi Chini Bhai Bhai is 50 years old. Now, please forget it.
So, I mean, I wish we could have continued this further, but time has completely run out. Thank you so much, Prasenjit, for explaining everything in much detail. Thank you and appreciate that. Thank you.
My pleasure.